Sorry for the delay in uploading videos. Anyway, now let us discuss about public finance and budgetary deficit. So, don't think heavily about this topic, just try to understand it simply. Public finance, public, that is people, finance, money, investment, expenditure, everything related to people, that is nothing but public finance. So all the matters related with money in terms of investment, revenue, expenditure, everything in terms of money for people is nothing but public finance. Usually about the people or about the public, money matters will be existing in the budget laid by the government. So, to understand it simply, we can say that government budgeting is nothing but public finance. Government budgeting is nothing but public finance, because it is the government budget that is making everything with money for the public. For what purpose is the budget laid by the government? It is for the welfare of the people, for the governance of the people, and for the administration of the country, for the welfare of the people. So, government budgeting is nothing but public finance. And here there is another topic, budgetary deficit. Here, this topic, budgetary deficit, will be explained almost at the end of the topic public finance. If we have to completely get an idea over this whole topic, we should go through three questions. What are they? What is a budget? What is the meaning of a budgetary policy? What is the meaning of a deficit? Through these three questions, we will be completely able to understand the topic completely. So let us start now from the first question. What is a budget? See here, budget means, usually the people will think that whenever there is a chance of budget being introduced in the parliament, the people think that changes are going on to be in taxes. See, budget means simply not any changes about the taxes. Budget is everything for a country. If I have to explain you clearly about the budget, first let me explain you an example. See, consider an individual. He is having some expenses for this month. So he has to lead his life, and for that he needs some expenditure, and all that spending will be from his income. And that individual, what he will do? He will just check out his expenses, whatever he feels necessary, and then he will try to meet those expenses with the income he is getting. But remember, every individual, a common individual, first he will calculate his income, and mostly within the limits of his income only he will try to spend something. If he is going out of the limits of his income, that will be the foremost necessity, and so he is crossing the limits, and he will dare to do some debt. He will go and borrow the money from somewhere, and he will try to meet that foremost necessity, which is forcing him to cross the limits of his income. That is how an individual will go. But a government will not do in such a way. First, the government will plan its expenditure, just will estimate its expenditure. How much I need to spend in this year for the welfare of my public as well as for the administration of the government. Then after estimating the total expenditure, then only the government will try to collect the money as an income from other resources. Which means, first it will estimate the expenditure, then to meet its expenditure, it will start collecting the money from the available income resources. What an individual will do? First, he will know what is the income he is getting. Within the limits of his income only he will plan his expenditure. However, sometimes he will be forced to cross the limits because of some important necessity. That important necessity will depend on the caliber of each individual. Just forget it. You have to know only one thing, that an individual first estimates his income, then only he will try to plan his expenditure. Whereas the government is totally reverse. It first estimates its expenditure and only then it will try to meet that expenditure by collecting the money from different income resources. And such a calculation of estimating the expenditure for everything, for the welfare of the public and for giving salaries to the public, for pensions, scholarships and for regular government running, everything, every expenditure of the government. And the calculation of such an expenditure should be in a way that the government will meet that expenditures however. So this word however will give some different indication. See, government first estimates the expenditure, then to meet its expenditure it will check out the available income resources. Whenever it is not having sufficient income resources to meet that expenditures, the only chance is borrowing. That's all. Just combining the income from the available resources and the borrowing, the whole two will be combined and then it will try to meet the expenditures. You may ask, why it should go for borrowing? Can't it also have some limits and be itself within the limits? See, usually when a government lays a budget, it will have some norms that in this year it have to construct some roads, it have to give some more and more pensions, and it have to allocate more resources for defense, or it have to allocate more funds for hospitals because some new diseases are coming, and for the rural hospitality, everything. So to meet that norms, the government will estimate the expenditure. Such norms will force the government sometimes under any circumstances to borrow the money from somewhere and to work for the welfare of the public and thus for the development of the people. Definitely every government will borrow the money to meet its expenditures. Otherwise a government cannot dare for the development of the country. So it will bring the money from two sources. One is its income resources, another is from borrowing. Thus the total calculation of expenditure, and to meet the expenditure with the two types of incomes, one is the income resources available, another is the borrowing, the whole thing will give the word budget. So that is what is going to be in budget. That means budget is everything for a country. It is not simply taxes. Taxes is just a part in the budget. So you understood what is the meaning of a budget. Now let me explain you something about this budgetary policy. Then again we will go back to this budget. Okay. Now what is this budgetary policy? See, a policy is nothing but some rules and regulations or principles followed by a particular entity in a procedure. Entity means some association or some governing body, whatever it may be. Such an association or governing body is following some principles in carrying on a procedure. That is a policy. Now here, budgetary policy means policy, that means principles, rules, regulations and norms followed by the government that means ruling party, in laying the budget is nothing but budgetary policy. That means implementation of the thoughts, principles, norms and any constitutionally predefined rules and regulations in laying the budget by the government, which means a ruling party, is nothing but budgetary policy. So implementation of the policy in the budget will be shown in the procedure of the parliamentary procedure of the budget, and that is nothing but the budgetary policy. That means implementation of the policies of the government in the budget is budgetary policy. Here this word policy may include, as I told you, rules and regulations which are predefined constitutionally, then any norms that the government should follow, third, any principles that the government should follow depending upon the circumstances of the development of the country, and any hazards or any problems which the country is facing. And fourth one is, usually the government will be run by a ruling party. If the ruling party promises something to the public in its previous election agenda, then usually to fulfill the promises, such ruling party also includes such promises in its budgetary policy. That also will be included. So that is nothing but a budgetary policy. I hope there is no confusion for you in this topic. Right. That means now in a parliament, in a process of introducing the budget, what is going on there? Two things are going on there. One is implementation of government's policy through budgetary policy in the budget, and such a budget which is having everything, estimation of its expenditure and the calculation of its income resources to meet the expenditure, and if it is not able to meet the expenditure with the available income resources, then the amount which is to be borrowed and thus to meet the expenditure. That whole thing is nothing but the process of a government budgeting in the parliament. Right? Now, I have to explain you about this deficit. I need to explain you something about this budget in an example, and at the end of the example I will explain you about this deficit. So just keep going on. So what will be included in a budget? See, usually you see that today in the parliament the finance minister is going to introduce the budget. So in that budget document, what is going to be there? Let us look now. Mostly it will have three components. The three components will be explained to you with an example. See, the current year is 2013. In this budget, they are announcing the budgetary estimates of 2013. Okay, the plan, everything, budget, everything for 2013. Then, you know what will be included in the budget? About 2012, there are 2 years. One is 2011, another one is 2012, another one is the 2013 year. So this is the present, this is the last year, this is the previous year. Now, in the budget there will be three parts. Here, first, there will be complete explanation and the actual values of what happened in India for the year 2011 budget. Actual, it is not estimation. Actual in the sense, all the statistics from all the different departments of government will be arriving to the finance minister, and he will consider it as a base. So, actual calculation and statistics of 2011 budget after the completion of the year 2011 will be there here. That is actual statistics of budget of 2011. Next, 2012. Now budget estimates of 2012 will be here. By the time the finance minister will go to announce the budget plan of 2013, just before 1 month of the process, it is the responsibility of all the joint secretaries of different departments in the central secretariat to give the statistics of the amount spent and why it is spent and on what it is spent, and if anything is remained, why it is remained. Everything should be sent to the finance minister at least before 1 month. He introduces the budget in the parliament. So such statistics will be announced. So instead of saying it as budget estimates, we can say it as calculated budget estimates from different departments for the year 2012. Then this is the basis and this is the just experience we are having. Depending upon this basis and depending upon this experience, combining both, they will go for the estimation of the budget for the year 2013. So here new budget estimates for the present year 2013. That means what will be there in the three parts, that is actual statistics of the previous year, preceding year, budget estimates of the just completed year, and using both new budget estimates for the current future year. So these are the three parts that will be in the budget document when the finance minister is going to announce the budget in the parliament. So this is the actual structure of the budget document. Now let us go further into the deep discussion how the budget estimates will be announced. Look here. Here in this word budget, we need to have two parts. One is income, the other one is expenditure. As I told you, the government first it will estimate the expenditure, then this expenditure will be met by all the types of incomes, direct income to the government and any borrowings, everything. Now here, income is again having two parts. What is that? One is revenue income, another one is capital income. So now I explained you it simply. If we have to speak in complete economic terminology, actually we are not supported to say it as income. It is called as receipts, total receipts. Income should be explained in the form of total receipts. And this total receipts now is divided into revenue receipts, capital receipts. Receipts means money which is received, so we call it as receipts. Total receipts, that is income, is divided into two parts. That is, there will be two types of incomes, two types of receipts. What are they? Revenue receipt, capital receipt. Okay. Now the same will be used here also. Expenditure means revenue expenditure and capital expenditure. Revenue expenditure and capital expenditure. So now you came to understand that in budget usually there will be two parts. One is income, which means receipts. Another one is expenditure. In receipts there are two parts, two types of receipts: revenue receipt, capital receipts. And again in expenditure there are two types: revenue expenditure, capital expenditure. Let us further discuss about what includes in revenue receipts, what includes in capital receipts, and what includes in revenue expenditure, what includes in capital expenditure. So in the budget, this is the flow chart how the budget structure will be there. Receipts, I already told you, receipts means income. So here receipts will be, as explained you, revenue and capital. Two types will be involving in receipts, revenue as well as capital. And in expenditure also two types will be involving, revenue and capital expenditure. Now in the revenue receipts, the income is from these possible income resources. Among them, one income resource is tax revenue, that is income from tax that is collected. The other one is non-tax revenue, revenue through any non-tax income resources. I will explain you what are they. You know the meaning of tax revenue means that is the income the government gets from the total taxes collected from the public through different types of taxes, direct and indirect taxes. We will discuss about these taxes in the other topic, and such income will be added here. What is the other non-tax revenue means? See, actually in the non-tax revenue, the thing that will be included is government will give some lending to public as well as to local and state governments. Okay, to the public in the sense, those people who are working in public enterprise, they take some loan. Okay, so the interest payments on such loans, both from state as well as from the local governments, and if any public also took the loan, the interest payments on such loans will be added as a non-tax revenue, which means non-tax income here. And usually the government will invest in some enterprises, in some companies. We'll call them as public enterprises. See, Indian Airways, that is Air India, is a public enterprise. Railways is a public enterprise. There are some huge and heavy industries which are also comes under public enterprises. And the profits from such public enterprises is also an income to the government, that is a non-tax revenue income. And such these two revenue receipts will be one source of income. Then what is another type of revenue? That is the capital revenue. What is this capital revenue? See, the capital receipts, sorry, not capital revenue, capital receipts, forgive me. So what is this capital receipts? I told you about the interest payments here. Forget about the interest payments. Now, totally the loan is completely recovered. Such complete recovered loans from state governments as well as from the local governments. And if the share in the public enterprises is disinvested, then the disinvested amount is also a income to the government. So we consider it as a capital income, which means capital receipts. What is the third one? Simply borrowings. So borrowings from different types of institutions. Either it may be domestic institutions or it may be foreign institutions. All such borrowings will be also included in the capital. Remember, never include grants from foreign countries in the capital receipts. That grants also should be included in the non-tax revenue of the government, because revenue means nothing but which doesn't hold any liability, which means the government is not necessary to pay it back. That comes under revenue. Is there any necessity of tax revenue to be paid back to the public? No. Tax revenue is complete holding to the government. No one is having a power or questioning to government regarding this tax revenue. Whereas in capital receipts, definitely it holds some liability through borrowings, or a capital receipt is nothing but something due to asset reduction. See, loan is actually an asset because the government will get an interest. Now the loan is completely recovered. Will it get some interest on that? No. So there is a asset reduction until otherwise that loan is again transferred to some other public or some other entity like state government or local government. Disinvested enterprise. Before this disinvestment, the government is having a holding in the stocks, in the share of that particular enterprise or company. Now it is disinvested. No asset. So revenue means which doesn't hold any liability. Capital means either it holds liability or it is because of some asset reduction. Okay. So grants will not have any liability. Grants means if UK government is having some surplus funds and it wants to take care of some welfare of the other countries in the world, to show some concern towards the world, then UK announces some grants to some countries. In the same way, if some country is announcing some grant to India, that grant is not a liability, it is a concern by that particular foreign country to India. So that grant should be only calculated in this revenues. Either it can be considered as a non-tax revenue or as a separate third class as a grant. Anyway, under any circumstances, grant is to be calculated only in revenue part. In capital, you understood recovered loans, disinvested enterprises and borrowings. So all together, when these two are combined, they give the receipts, that is income. Okay, income, that is receipts, total receipts for budget purpose. Now let us go for expenditure part. See, before I explain you anything about the expenditure for revenue expenditure as well as for capital expenditure, I have to explain you about two types of expenditures. See, here I plotted them. In expenditures, there are again two types. One is planned expenditure, another one is unplanned expenditure. What is this planned expenditure? Usually, some countries follow planning, and even we are also following the planning which is adopted from Russia. For that planning, we need to spend some money, that is expenditure. So, estimates of expenditure for planning are nothing but planned expenditure. But that is for some planned targets, and to achieve that planned targets in some separate or certain sectors, we need to have some expenditure estimates, and that is only for the purpose of planning. So we call it as planned expenditure. But remember, Apart from planning, every nation will have some regular administrative expenditures and some unexpected expenditures. No country can get itself skipped away from such non-planned expenditure. So, expenditure made by a nation on such unplanned issues like regular government administration and any sudden calamities. The government has to face such calamities and should give some concern to the public by announcing some exchequer like this. So such payments are considered as unplanned expenditure payments. So such planned expenditure payments and unplanned expenditure payments, both of them combined together and form the expenditure or spending of the government in the budget. If that is a separate classification regarding expenditure, again expenditure because of its behavior or characteristics is again of two types, that is revenue expenditure, capital expenditure. Revenue expenditure means which cannot be bought back, which means revenue expenditure means salaries. Can the government take back the salaries which are given to the public? No, the government cannot take back the salaries which are given to the public. Maintenance, either it may be maintenance of properties or it may be maintenance of the government, whatever it may be, it cannot be paid back. So such things which doesn't give any liability, see here, which doesn't hold any liability on the government by anything, here on which the government cannot have any liability. On salaries, government cannot have any liability. On maintenance, the government cannot have any liability. So such things on which the government cannot have any liability, such expenditures are revenue expenditures. Example are salaries and maintenance. Then capital expenditure. Capital expenditure is an expenditure which is going to create some asset to the government. Roads are the assets of the government because government collects the toll taxes. And government buildings, for its administration, the government will have some buildings, and definitely if the government is having some office, definitely some revenue payments will be there to the government. So we can consider it as an asset because some other time the government can sell that building and get the money. So such government buildings are also assets, so it is also a capital expenditure. Investment by the government in some public enterprise companies, that is an investment. Because of that investment, the government is getting some hold, that is it is getting some liability through a share in the company. So it is an asset. Such any asset creation activities which are capital in nature will come under the capital expenditure. So this is the complete flow chart where you can get a complete idea of what will be there in the budget. Receipts, in the budget income will be estimated. So budget receipts, that is revenue receipts and capital receipts, tax revenue as well as non-tax revenue and grants will be included in the revenue receipts. And in the capital receipts, loans recovered, disinvested, any disinvestment from enterprises and borrowings will be calculated as in capital receipts. All together they form the total receipts here. And then expenditure, revenue expenditure and capital expenditure, salaries as well as maintenance, and the whole expenditure will be calculated as revenue expenditure. Roads, buildings and investment, that everything will be considered as a capital expenditure. And this revenue expenditure plus capital expenditure will give rise to the total expenditure. Now the total receipts, that is the total income, and the total expenditure, the two will be subtracted depending upon the surplus. Either if there is a surplus in receipts, from the receipts the expenditure will be subtracted. If the expenditure is much, then from the total expenditure the total receipts will be subtracted. That gap, remember, that gap between the total expenditure and total income, when the expenditure is high than the income or receipts, that gap between the total receipts and the total expenditure, when expenditure is much higher than the receipts, is called the deficit. Is called a deficit. We call it as budgetary deficit. The term budgetary deficit can be defined as the gap between total expenditure and total receipts, when expenditure is much higher than the receipts, is called as a budgetary deficit. But we have to know one thing, that in deficit there are again three different types of deficits. Related to budget there are two different types, and one deficit is totally different. What are they? Related to budget there are two different types of deficits. One is budgetary deficit, which I already explained you know. The other one is fiscal deficit. Actually the term fiscal deficit is not existing in India in the past. From 1991 and 92 budget estimates onwards, fiscal deficit is introduced in Indian budget. What is this fiscal deficit? I will explain you later. Now, budgetary deficit and fiscal deficit, these both are related to budget. The third deficit I said to you that is totally different is current account deficit, which is totally different from these two. That current account deficit is nothing but gap between the total balance of payments. So what is this balance of payments? What is this current account deficit? We'll explain it to you in the next class. But now let us discuss about budgetary deficit and fiscal deficit, with which this topic public finance will be almost completed. Now let us know the difference between budgetary deficit and fiscal deficit. But for that I request you to keep in mind all this flow chart and terminology, because we need the help of total receipts, that is revenue receipts and capital receipts, as well as revenue expenditure and capital expenditure, to explain you about the difference between budgetary deficit and fiscal deficit. Look here. See, revenue receipts, that is tax, non-tax as I explained you just before, and grants. Let us consider here an example that revenue receipts are around 110 crores. Just it is an example, okay? Then capital receipts. See, this capital receipts includes three different parts as I explained you earlier. One is loans which are recovered. Another one is disinvestment. See, the loans which are recovered as well as disinvestment is an asset reduction receipts of capital receipts. It is an asset reduction, but it doesn't create any liability on the government. Simply it is withdrawing its investment in the form of loan recovery as well as in the form of disinvestment in some enterprises. Thus, here loans and disinvestment, for these two there are some 80 crore rupees, whereas there is another part in capital receipts. If you remember in the previous flow chart, borrowings. Here these borrowings are around some 52 crore rupees, right? Now if we add up the total, we get the total receipts. Now add them up. Total 242 crore rupees is the total receipts in the budget. Okay. Now I am writing here the total receipts from this as 242 crores, and I am just pointing here about the borrowings. In this 242 crores, borrowed is 52 crores. Okay, keep these two in mind. Now I will give you an example about the expenditure. Revenue expenditure, capital expenditure. Again you have to remember, expenditure is of two types, planned and unplanned. Okay, planned as well as unplanned expenditure exists in revenue as well as in capital. That means in revenue expenditure, planned expenditure as well as unplanned expenditure. Here also same. In capital also planned as well as unplanned. Now let us check out here that 70 crore rupees is the revenue planned expenditure, and revenue unplanned expenditure is something around 80 crores, and capital planned expenditure is something around 100 crores, and capital unplanned expenditure is something around 60 crores. Now total revenue expenditure is 150 crores. Total capital expenditure is 160 crores. Total expenditure when we add up the two is 150 plus 160, totally 310 crores is the total expenditure. 310 crores is the total estimated expenditure. Now let us write here. 310 crores. Now, what is the budgetary deficit means? This 310 crore, which is the total expenditure, from which when we subtract the total receipts 242 crores, what is the total amount that we get here? $68 crores. 250 plus 310 crores will be the difference. So 68 crores is the difference between total receipts and total expenditure, whereas here the expenditure is much. So this 68 crores is the budgetary deficit. That means when we had all the estimates of income as well as expenditure, at last when the estimates of expenditure are high and the estimates of receipts are less, that difference is the budgetary deficit. Then what is fiscal deficit? To this budgetary deficit, when we add up the total amount borrowed in the previous flowchart, that is borrowings from the capital receipts, that 68 plus 52, totally 120 crores is the fiscal deficit. That means fiscal deficit means difference between the expenditure estimates and receipts plus borrowed money from other sources. So this fiscal deficit is going to explain the actual condition of the money or the funds available. See, I said this as the budgetary deficit 68 crores. For what we are calculating the budgetary deficit, or for what the government is calculating the budgetary deficit, how much money we have to again borrow so that we can meet our expenditures. For that purpose the government calculates the budgetary deficit. But this budgetary deficit is amount to be borrowed at the end of the estimates. Then what about the amount that is already borrowed before the estimates or already calculated before the estimates? The government is having the liability even for the borrowed money before, as well as the government will have the liability for the money which the government will borrow now. That means what is the total government's debt? This is 68 crores which the government will borrow now, and the 52 crores which already the government is set to borrow. So only the fiscal deficit is going to explain the total borrowings of the government. So than the budgetary deficit, fiscal deficit is important. That's why when the fiscal deficit is going up or when it is becoming much, the government will be worrying because of its increasing interest payments or because of its increasing debt burden. That means budgetary deficit is just a usual term, the difference between the total estimated expenditure and the total estimated receipts. It is not going to reveal the actual amount that the country is borrowing. It is the fiscal deficit which explains that the total government borrowings in total, just like this. So fiscal deficit will have a upper hand in priority than the budgetary deficit, because than the budgetary deficit, fiscal deficit is revealing more about the borrowings. So this is the topic, public finance and budget.